Hey there, welcome to the channel. So just a quick review of where we left off on Friday. So the S&P, we had kind of a rally, a little bit of a rally on Friday. So now going and looking at the weekly, we can see that over here, this bar has, let's see. Yeah, we had a day where, look, we got back above like the 50-week moving average. So that's about the 200-day, that area. So it looks like we got above there. That's kind of what I'm wondering. I'm like wondering, like, okay, it found some support below here and now got above an important moving average. Let's look at that. Dow Jones Industrial Average, similar type thing, just above that 50-week moving average. And then on the daily, just so you can see, it's okay. So on the weekly, it's above the 50-week, but it's not above the 200, but it's kind of trying to fight to get up there. And then the NASDAQ is looking to be the weaker of these. Let's see. So yeah, the NASDAQ is still lower. So and then let's look at IWM. This one, is still pretty weak too, but it kind of dojied out. So you basically have really high volume last week and everything like that. And but what you see is there was a little bit of recovery. There was kind of a little bit of what I would say arresting the fall. So let's look at the SPY and see what happened here. And here we are. So we can see that what happened here on Friday is that, yeah, we had a strong bar here. This was actually a pretty strong bar. We had this low here that we got to, and we basically hit that low at about 420. And then we've come up and then we're just kind of in this range here. But now we kind of have this little bit of a strong bar that we, had on Friday. So what I did is I bought like a little bit SPY. The reasoning that I have, like, so I had kind of gotten out of like everything because I just didn't want to be dealing with this crap, dealing with this sell off and everything. And I just want to preserve capital, basically as far as I'm concerned, when it comes to this kind of stuff, I just want to I'm never going to time the market perfectly. That's not going to happen. But the thing is, I just want to try to avoid some of the worst of the downdrafts. And then that way, when the market stabilizes, puts in a new base and starts going up again, then at that point, you just, put money in and blah, 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 and let it go up with the market. In the meantime, if you want to short and that kind of stuff, it's really technical. It's really dangerous. And so what we have, you can see that, we had like 5 days here of just, different, just really like volatile days and everything like that. So looking at that, that's what that's what I see. So my view is like, hey, look, we're kind of set up to maybe have some kind of like a little bit of some up days here is my guess. Now, this is not financial advice. And I don't know. I don't know any more than you do about it, but it just sort of seems that way to me. Like, hey, look, we kind of hammered out a bottom here, but this is a short-term bottom. So this is not something like, oh, we hit the bottom and then we expect to go up and put in all new highs here. That's not what I'm looking at. Now, the other one I'm kind of looking at too is XLV finally put in the strong bar there. That's interesting. So yeah, that's one I'm going to look at too, because this XLV is one of these, it's more of like a consumer staple, that you still have to go to the doctor even if you don't have a job. And so they will still work out something. And you see that. So if you look at XLP consumer staples, also put in, kind of like with the rest of the market. My only problem with XLP is like the thing is still way off this 50-week moving average. So it's still kind of over. It's kind of extended. Now, maybe that's where it'll stay and it'll just keep going, but I don't know. IWM, this one is one of the weakest one. This one has just gotten the crap kicked out of it in all manner of speaking. And so this one now, if I look at it, let's say we have a few days or a week or two where we get a little bit of rally. This one is in the weakest position. Imagine it comes up and it actually has some good days. Then it's like it's going to hit this resistance. It's hitting this moving down average. You've got the cross here, the death cross. This is set up for more downs. The IWM just to me looks the weakest of them all right now. And then if I looked at like RK, and just so we understand, like, and that's the thing. Where's the support? That's really the thing that I look at is important. Like, okay, where's the next support? somewhere in here, right? So the next support is down at 160. It's, it's in this whole area down here. So look, we still got all this time to go to get there. So that's why that one is like, oh my goodness. Yeah. So that one is still very not good. Now, I want to just look at the really highly speculative sector like arcade. Now, if you saw my previous video on SFT fundamentals, now I don't know if ARC has any of that. We could check that. I probably don't think they do. I don't think anyone owns that anymore after how much that's been beat up. But yeah, what I'm going to do is I'm going to start trying to go through some like fundamental analysis of various stocks that are out there, the Meet Kevins and whatever. And what you'll find is like, we'll just kind of see, obviously these stocks, like they have some top line growth, but you can start to see when you do these vertical and horizontal analysis that like, hey, they kind of have some issues there. So looking at this one, this one once again is really weak too. But the better situation for this guy is that, look, it's been beat up so bad. He's like, where's the support? Maybe some support down here where this previous little high was and this little area here. So maybe have some support there. If you had some support there, it blew through it. So maybe you're closer to where you can maybe put in a bottom. And if you were doing like Fibonacci retracements and all that crap, you can do that. I'm not a big fib guy because my experience with Fibonacci is this. My experience with Fibonacci is that, you have, your 5 count, 3 count. And the problem is that it just, I think there's a lot of, just like, look, you just make the counts match what your preconceived notion of what it is. And, maybe I misunderstand it, whatever, but like, here we are. So here would be a retracement. Like, okay, so someone would come off and say, let's see, what is the retracement? So that was 100%. So this would be so what I have to do is I have to just do it in the reverse direction. So if I go like this and I say, well, where are we? How much did it retrace? That's not how I do it. How do I do it? See, I don't even know how to do the Fibonacci stuff anymore. So normally like the retracement. Yeah. Okay. So here you are at the top and we're having a retracement. Okay. So now you say, look, 61% retracement level is, right here. And you can see it spent a lot of time there. And the 50% retracement was down there. And the 38% retracement, well, it kind of blew through that. But 38% retracement became resistance when it started to come up back here a few weeks ago. And now we're getting down to that, 100%. And so what does that mean? Zero. That's 100% retracement. We've already hit that 100% retracement. So, what does that mean? It means nothing. I guess maybe what I'm supposed to do, and I'm just doing this with you. Let's say I take the whole move that we had, right? So now let's look at it this way. So let's look at Fibonacci this way. And maybe this is the way you're supposed to do it. We had a move here, 100% move. Now, as you come back and you start correcting, there's 61% puts you at like 110. Okay, so it kind of came and it spent a lot of time around the 61% retracement. Spent a little bit of time at the 50% and a little bit at 38% retracement, but irrelevant. It blew through all those levels. So all those levels didn't help you. The only thing that you see is that, there's probably some resistance here. And the thing is, it's probably so oversold that you'll get some buying in here at some point. So that's kind of what I see for this week is I do see that, I would not be surprised that, hey, we get some buying going on. But in the big picture, that's the key. The key is like, are we still going into a bear market or are we not? Is this really going to pan out the way, I think it is? I can't say, but this is sort of the question, that you have to ask, is this thing gonna, come in and like go out to do highs, or are we just going to go into like a consolidation period for a while? And, or are we going to come back in? It's going to hit into this moving average and like start. So if I, is it going to come up, kind of fail at the high and then put in new lows? So when you look at it, when you look at S&P, SPY in the weekly chart, we don't know, right? We really don't know. We have to see like, okay, we've had this leg down and we need to have a leg up and we need to see how far it goes. And does it put in a new high? And then we need the retracement down and we need to see, does it put in a new low? Or does it hold at this low? And so does it turn into a consolidation period where, hey, we're going to just bide our time here for a bit? Or does it turn into the downtrend where, okay, it comes up, it fails at the previous high and starts putting in new lower lows and lower highs? We don't see that in S&P. And what may happen is the S&P may not correct very much at all. I mean, that's a really interesting point. Because it is such a wide ranging sector, it may not correct at all. Like looking at the industrials, it's like, okay, there's not much of a correction. But the problem is when you look at the small caps, they're really taking, a lot of pressure, and the speculative end of the market is taking a lot of pressure. So that's kind of where we're at. The other thing that we need to look at is let's see the rates. Now, see the rates, people watch the rates a lot. And, like the big picture on the rates are that, they're pushing up, and if the Fed's going to raise rates, then they're, to me, they're obviously going to go up. So, but the question is, how much are they going to go? And that's really the thing. So where we're at right now, if you look at this, these rates, you really have a lot of resistance up here, 2%. So this would be at about 2%. We've really worked our way up. We had the Cerveza thing, put in this kind of W, we've broken out. We stopped short of that 2%. And now we just have this kind of wavy thing going on right now. But we are breaking out. Here's the thing, right? We broke above this high. And I think, and kind of technically we peaked out above this high. So we're starting to put in these higher highs and higher lows. And now it might be wedgy or whatever, but it's kind of working its way up. So the rates are going to go up. If the Fed's going to push rates up, these will just have to kind of go up with it. So it shouldn't be a surprise. But the 10-year, I mean, sure, it is a problem for housing. It's a problem for cars. It's a problem for all that stuff. So that is something to watch as well. The other one we could look at is the dollar. And if we look at UUP, and the dollar, really, look at that bar. I mean, it just had a very strong day. Look at that. So what's going on with the dollar? We go back to our weekly chart, and like I've pointed this out before, that this is a huge bottom. I mean, you had Cerveza total volatility here, comes down, put in this W bottom on the weekly chart. This is a huge bottom. So like you're looking in see, we had the dollar kind of going down for like 7 weeks here. And then, but gosh, last week it just got really strong. So the dollar, Brett Johnson milkshake theory darn well could be playing out. You can get into these debates with Schiff versus milkshake theory, Johnson, but just look at the chart right now. Everything's a tug of war. There's these multiple forces. There's forces pushing the dollar up and forces weakening the dollar. There's forces pushing the stock market up and forces weakening it. Right now, this kind of shows that we have this very long-term kind of okay, it's being pushed up right now. And that's just what the chart says. That's what it is. Now, if you look for how far is this going to go, you really can't say, but where's our resistance is up here, right? So if we said, well, where might the dollar rise be arrested? Where might it be arrested? Well, in here, right? So somewhere at this top, and you can pick your area and how long it traded here. You have a really volatile area there, but somewhere in there is where you would expect that maybe it would arrest its fall there. So that's kind of what we see there. Now it's interesting because the dollar doing that, gold had a bad week last week. Now gold is holding up. I mean, it's going nowhere. You look at a chart that hasn't really gone anywhere, but that's going to be interesting because if that dollar now is breaking out, then, it's kind of a good sign for gold. Now, looking at the week that we had, that's a pretty bad week. That's a pretty serious down bar. However, it didn't really break out of that support trend line yet. But we'll see. Now, if that dollar keeps moving this week, then that could really send gold. Now, if gold, so be careful on gold. If it breaks out of here, this thing breaks out of this kind of area, then it has some room to start really working down. And then where's your support? I mean, maybe you got some here. Trying to figure out other places where maybe it had some support. Maybe over here a little bit closer. Yeah. No, this area here, you would have some support, right? This area. So at like 160, there would be some support. And then maybe, you know, somewhere in here, all the way down at 140, 138. It's really hard to say how much support there is there, but that's where maybe you would find it. But the problem is if it breaks out of this, and that was a strong bar and it did have volume on it. It had volume, so it was a strong week. So that may be kind of a death knell for gold, at least over the next intermediate term. So that's it for this one. In summary, kind of looking for, you know, maybe just kind of a rotate up this week. Given the damage that's been done in the more speculative part of the market, it's really hard to say whether we're actually going into that bear market, as I was saying in one of my earlier videos. Maybe we're not. Maybe we're just maybe the main averages, your SPY, your Dow Jones, are going to hang in there and just kind of correct for a while and just bide our time. It could be possible, but we'll have to see. But the thing is, it takes a long time. You know, go look at those market tops, look at the charts yourself of what happened in the tech crash, what happened in the great financial crisis, 08, 09, 2000, and then go look what happened even back here and the Cerveza thing. You know, this stuff happened pretty fast. This happened pretty fast, and this came out. But this over here was such an exception. This was like literally, when this thing came out, this came out because they passed that CARES Act, which they just like poured money into everything. So this happened really fast. This is the exception. This is not the rule. So that's what we need to keep in mind. If the market does this totally like collapse, are they going to come in and do this? This was not really the Fed. Yes, the Fed dropped rates, but that the market didn't respond. It was when the CARES Act came in and was then voted on and then signed that it really put in those hard bottoms and started coming back up. All right, so that's it for this one. Talk to you later. Bye.